Stay tuned to the futures levels on 1210. The market is open. There is yet another roll on Thinkorswim this time, so don't be freaked out if you see a little gap up or a big gap up. That's what happened in TradingView last week. So I'm looking at the new contract here, so for continuity purposes, you can see that they're buying dips. This is a 5-minute candle, so just talking about the very short term for somebody trading overnight. The comments are such. If we lose 46.57.5, we might end up at 46.50. How do I trade that on a rally into 4662 or 4664? I could fade it with a stop. The stop, I think, would be just above the high, because then you don't know where it's going to go. You have nothing to peg against. One could short right here if you're an active trader and with a good stop, a good stomach for risk. You could stop out as soon as they get above 4662 perhaps, because there are some selling candles on a 5-minute basis there. But the assumption is they will buy the dip into these two moving averages that you see out there. But the form is looking like a head and shoulders. Losing the footing might give you a few points down, maybe even down to 46.51. If you can make money at that, that will be the trade. Now, of course, if they take out the high, 4674, 4675 would be the target. We are going into some emotional catalyst on Tuesday, Wednesday. I'm not sure how much they're going to do overnight, before a day before that. Okay, so if we wanted to go shorter term, this is what the battle looks like. You can see the selling zones at 4662. I would take this candle at 4661.75 versus this little wick here. Look, it is exactly the wick back in on Friday. So the level on that is 4657.5. 4657.5. The 15-minute, I don't think is going to give us any more clarity other than what we did in the strategy video. You can review that for the bigger picture. Okay, let's switch over to the NASDAQ. On the NASDAQ, we have had some sort of, it's somewhat of a different feel to it. On the 2-hour, it looks like it's consolidating for a move up or down. We don't know, of course. The trigger up on the 2 hours, I'll zoom in. I'll do the opposite here. 16,415. Let's round up to 416. So 16,416 or higher, you have open space. I wouldn't be short above that. In fact, if somebody wants to go long into that, if you have a good stopping mechanism in your trades, then the long is on a higher low. So if you catch a dip overnight towards 16,235 and you go long into that little cup, you might be able to curl it up, but that's a 2-hour chart. So let's zoom in on that and see how realistic that is. All right, I would watch to see how they would behave at 16,290 if at all. Rallies into that should find sellers, and if so, they might bleed lower to 16,250. So if somebody's short already, without, from before, just now, before you see this video, I would stay short as long as they're selling that rally, if they are indeed selling it. It looks that they are on the 1 minute. So how about this? Below 16,272, you might get 10 points out of that or more. The NASDAQ is a little more difficult to trade, but those are the actionable lines there. We do have a sell the rally mode on the 1 minute. Switching over to the RTY, that's the Russell futures contract. We have on the 15-minute candle, the bulls are in charge, but we are still ping pong. We have a big range that we're going back and forth in. Again, go back and refer to the game plan if you want the big picture. Right now, we have sellers, hardcore sellers at 1909, I'm rounding up, and 1912. That was a good year. No kidding, of course. 1915. 1909, 12, and 15. Those are catalysts. So if you take out 1909, you might have enough oomph to take out the other two. We have higher low. That's on the 15-minute. Let's go into 1 minute if we have any granularity here. Mini battle is somewhere around 1903. You lose that, you might fill that gap below. But you see, the bulls have the benefit of the doubt, and this has been strong of late. So overall, it's lacking, but of late, it's strong. It's not my favorite to trade very fast, so it's a matter of perspective. At what time frame are you trading? That's going to dictate. So we're looking at the Dow, the YM, the Dow futures. Technically, this is a harmonic that should bring us back to 36,560, if not 36,440. 560 is where I would expect them to hit a battle. The battle is horizontal, so nobody has control over the price action. They're going back and forth around that yellow line. That's the 30-minute chart. Okay, so I would stop out immediately above 36.7 because there's nothing there. you're looking at, you know, nothing. The bears will be in deep trouble. Okay, so if somebody's short, oh boy, it needs to have a really tight stop. They are buying dips on this candle, on this speed. I think there would be buyers at 36, 620, and another batch of buyers at 36, 580. And I think the level buyers are best around 36, 540. This candle right there. So 540. Okay, now technically, again, it's too quiet and too sideways for me to have a direction. I would need to wait for something to happen. For example, I would need for it to go up into a prior fail to try and short it, or get long here and hope it goes up and see if I can break out. So I am not one to hope. I would rather see a pop to short or a dip to go long. We'll see if it gives you that opportunity overnight. So we go to crude, and on this one, I think I want to be more big picture. And this right here move that we've just had is desperate. It looks like this one right there back in November, early November, like about a month ago, and this one. So they are definitely selling rallies, and every rally looks great. This one looked good, and then it hit a level, and then it failed, made a lower low. This one looked good. It hasn't made a lower low until here. So this one looked the best. A lot of stuck bulls. I wouldn't bet long on it. For as long as we have a flood of supply from the U.S., I would not bet long on it. So I would be looking for exit. I think there are a lot of sellers at 72 and 73. So if it dips to 68, I would get long to catch one of these rallies. But going into 72, 73, I would play the reversal. And maybe you even can ride it from, say, 72. If I catch it at 72 and ride it all the way down and catch it down to 67, that would be a nice win. But that would take some guts, and it would take a hands-on management for probably overnight somehow. So be careful with that one. I'm going to stay top line on this one because I don't think the smaller time frames are going to do you any favor. Well, I guess they would. 72, 71.9, 71.95. I think there's a seller hiding there. 72 and 72.20. So you have a lot of sellers hiding. Now, taking out 71.7 could give you enough oomph to get up there, but then you have to meet all of these sellers. So there is a volume gap up here. So you could get to 72.4 or 72.6, but you might be disappointed. So I guess that's where it would be a nice short from up there. If they pop, play the short side just from upward, ends up down to 71.20 or 71. All right, this is the crude. Pretty important level for GC, the gold. So we have some sort of a fight right here for control. So watch here, there was a crossover on the moving averages. This is a 2-hour chart, so it's somewhat high time frame. So we are going through one of these dips, and they have been buying the dips into higher highs. However, what the hell is this? Is this one of those contract roll things? In any case, whatever it is, it's a problem to deal with on the chart. Also, sellers at 2040, 2045, and 2050. So I would give the advantage for now, for the next couple of days, to the sellers. So I would be in the mode of selling rallies. Let's see if we can get some levels on a shorter time frame. This is a 5-minute chart on GC. The bulls need to take care of 2024. And you take out 2024, you get to 2030 or 32. Then you have a bigger fight on your hand. That's a pretty big fight right there. So that's the opportunity long. So if somebody's going long from here, I get it. That's what they see. Just make sure you put a stop that's appropriate. Now, the bears, if somebody's short from up here, I also see it. So if I'm short from up here, I want to see if they're able to take this out, which is 2010. If they take out 2010, I think they threaten 2000. What? Yeah, I'm not calling for it. I'm just giving you the trades. If I'm long from here for the curl, I see it. And the opportunity is to stay long and break out of here and exit somewhere up at 2030, here being 2024. And if somebody's short from up there, I see it. They do have support, so they're going to bounce. And if the bounce fails at 2020 and they curl back down, I think the next fight would be around 2014 and 2012. You lose that fight, you end up in the low 2000s. Okay, you see how that plays out. I think I'm going to stop right here. Stay on your toes these days. If you're not sure what's going on, I would suggest I would start just to paper trade and get my bearing just to go through the mechanics of it. If I'm still new, as opposed to jumping in when markets are moving so fast. Good luck.